Today, folks, I am seeing the line of death start to circulate in the news again, and it's kind of complete fugazi, as I like to call it. Anytime somebody tells you what's going to happen tomorrow, slap them upside the head, call them a financial clown, and just say, hey, nobody knows what's going to happen tomorrow. And to just point a line straight down because we're trading at high multiples is a bit delulu. I get it. Things are expensive, but every major downturn in the market was a result of some kind of economic shift, whether the result of a black swan period, a geopolitical event. So you can't just say the markets are going to go down for the sake of going down. We need some kind of a catalyst to cause that. And though we are trading at perfect markets, and what I say by perfect is the PE is trading at highs that we haven't seen really since 08, the dot-com era. These are the sign of heavily speculative markets, FOMO markets that I don't appreciate, but I do recognize that these can persist for quite some time. We don't know the highs, we don't know the lows, and all you can do is cost average and just hold on for the most part. And it's why I'm making very specific bets in my portfolio. And in fact, I have a very large bet, and I bought more of it today, of course, Google stock. And I want to talk about that in this realm of fugazi, the short-term future expectations. We are seeing a rotation right now out of highly speculative stocks, high beta, smaller caps that were running excessively are going through a bit of a correction right now. We're seeing some of that money, I believe, move into where the value metrics are a little bit more sensible. And I got to break this down for you guys. So if you're on a path to financial independence, if you damn well one day want to retire early, join me, hit that subscribe button, because I am doing short-term swings right now. I am way more speculative than I used to be, and that is a result of valuations. At the end of the day, I'm a value guy. I have to understand where the future is, and I see value in things I understand because I know what future revenue and earnings expectations can be. But I don't know that right now with a lot of companies, including Microsoft, that is trading at almost a 40 times multiple. This company has ran 42% since the bottoms of April, which is just jaw-dropping for a company that actually isn't seeing very material earnings growth outside of 10%. You got to remember when, look at NVIDIA. NVIDIA was trading at a 40 to 50 times multiple. And look at the growth rate you're getting out of that versus Microsoft here that's getting, 10 to the mid-teens in growth rates on its earnings. Yet the price ratio right now is trading at highs never seen in the company's history. I want to keep that in mind. We've never, ever seen 40 times multiples in this company on a normal earnings period, which is just nuts. It's crazy, right? So do you think AI is going to be that explosive in a growth period to justify this? I don't know. So I don't want to own it outside of the index funds. You could say the same thing about Netflix. Like Netflix trading at a 52 times multiple. We had great earnings, mind-busting, fabulous earnings growth out of this company, but not enough for investors to be like, hey, I want to buy it up here, because we're starting to get buyer's exhaustion. I mean, these things have ran so much that we're running out of buyers. Valuations are getting a little extreme, and investors are saying, hey, maybe there's better places to put my capital out there other than Netflix, which is, it's going through these really volatile earnings periods, but revenue growth is, starting to come back a little bit, but we're nowhere near where we were in the earlier 20-teens era, right? So I don't like these companies. They're not my personal favorites. I don't mind holding them in the indexes, but this is why I bought more Google today. Google, I think, is going to go through a multiple expansion if the market remains as bullish as it is. All my bets right now in the market are highly reliant on the economy not shifting in any material way. No black swan events. Any of this could completely change the condition around how much Google I hold. But I am making a rather large speculative bet. We have well over 200 shares with what I bought today. And this is on the underlying expectation that Google is mispriced. Analysts are starting to wake up to it. FOMO is kicking in. And we could see a multiple expansion going up to anywhere between 25 to 35 times from the 21 that we currently sit at. And we'll take a look at some of my shares and what I plan on doing with them. But you have to keep in mind, like, there's no future pricing in this company. Not only are they buying shares back, we're talking about a company generating almost 100 billion now a quarter, which is insane. And that's growing at the low teen era, which is crazy. I mean, to be making 100 billion a quarter and growing at over 10% is already nuts, but they're doing a great job expanding margin, actualizing earnings. We're seeing like an average of a 30% earnings growth rate, which at a 20 times multiple doesn't make sense. This should easily be trading at a 30 to 40 times if the market's justified the current revenue and earnings. But because there's so much fear, obviously, around ChatGPT, which I think was the big initial concern that caused the downturn in Google, but people are a little bit more alleviated these days that that's not stealing too much market share currently from Google search. But we also have the monopolistic fines that are being finalized come August. I mean, that hearing will be the last one where we get the remedies to what they're going to have to perhaps sever as a monopolistic company. All of that, I think, is still priced in the stock and overpriced in to a major extent. If you look at the future of self-driving, genomics, quantum, you name it, this company has everything Tesla has, but none of the multiple priced into it at all, right? So yeah, I'm planning on taking probably the entirety of the position out of my TFSA as my TFSA has scaled over time through speculative bets, and I do two kinds of things to excel growth in this account. One of them is when we get major dip opportunities in like the S&P, like we did during the tariff war, I will double up contributions and really go heavy in those low periods. And on the other spectrum, I try and make swing trades, short-term bets that typically last anywhere from 6 months to a year up to 3 years. So we'll say 6 months to 3 years are usually these kind of time frames that I look at for my short-term trades. I do want to hold Google long-term. Fundamentally, I think it's a great long-term trade. But in the short term, because I recognize the price value indifference, I think I can actualize on it in this bull market, go heavier in it than I otherwise would. It makes up about 10% of our combined accounts between my wife and I. So I'm going to take this position, hopefully, double up the performance, get a 25 to 50% return. If we do run up to a 30 times multiple, that'd be great with the current earnings in the next, 1 to 3 months as we get through the August hearing and the fear gets alleviated. I will pretty much sell the entirety position out of this account, and I'll use that cash to start doubling up my cost average into the S&P or VDY or put it into other ETFs. I'm not as aggressive. I might hold a bit of this in cash just to see how the market pans out over the next 6 months. Doesn't hurt to have some cash, especially with those kind of gains that we can lock in off Google in such a short time frame. But it is starting to materialize, and now we're seeing FOMO kick in. I mean, I've been seeing analysts like weathermen. I hate them so much because obviously if stocks are going down, they'll change their price targets, and if stocks are going up, they readjust them to the upside, which is fugazi. That's like saying, oh, it's spitting outside. It's starting to rain. Okay, a thunderstorm is going to be coming. Let's change our price target. It's so dumb, and I don't know how these people have jobs. I really don't. But still, nonetheless, I mean, we'll take a look at price targets, but they're expecting that Google's earnings are going to be somewhere between 93.9 billion to about 95.6 billion. That's the range that we're currently playing in for Q2, I guess. And we're seeing the average price target, low end at 185, which seems insane to me, and a high end of 237. I'm looking to take profit hopefully around 220 to 250. That's the game plan right now. It's fugazi. I'm speculating. Call me a financial clown just as much as any of the other weathermen that call themselves professional economist or analyst. But damn it, I'm putting my money where my mouth is, and I'm being 100% transparent. I was here long before they were. Keep that in mind. My conviction's been here way longer than most of these analysts have been. So, I mean, I'm seeing a lot of articles now, Motley Fool, where should you invest $1,000 in Google, and like everyone is getting on Google's side again, which I love. If we go into their last quarterly report, the only thing that I'm really going to be looking at is two factors. I don't really care if we see again, this company's generating 90 billion right now, and I don't really care if we see a bit of a slowdown in, Google search. If we see a slowdown, I mean, we're talking about a company making 50 billion a quarter. It'd be nice. I think it's still going to grow. I don't really care if that peters off that much because I think the real value of this company's future is in the other bets. This includes Waymo and all that other stuff, but I'm presuming that this isn't put into the cloud side of it. I'm presuming VO3 and the Gemini services are put into other bets. And I think materially, they're charging $250 a month right now for all the Gemini tools, VO3. And I can't imagine that they're not going to get 100,000, 200,000, 500,000, 1 million users on that platform. And you do some quick math, and I mean, you're talking about 50, 100 million extra a quarter very quickly adds up. Even on the low end of converting a lot of new AI users, considering they're the leader in a lot of these tools right now. We'll see how that pans out, but I think people are missing the buck here. I think they're going to wake up to the reality that search isn't dying as quickly as they thought it was. And the only reason I made this bet was because I heard Sundar literally say that, I'm presuming he didn't mention the users, like how many users are still using search, but he says the average user is searching more than they otherwise would be. So we're seeing the average searches go up per user. So I think there's actually more searches going on than there ever have been with Google, even if there's less users, and all of that pans out to be bullish, obviously for search revenue and stuff. So we'll see. I could be wrong. Like I said, I'm speculating pretty heavy here. When I look at these analysts getting on my side all of a sudden, I just need the right formula for a great return. And that is recognizing when there was far too much hate in a great company. We were buying this cost averaging through good times here. Good at cost average at 170, I think 174, 177 is the average. We're already up 8+%. We're almost at double-digit returns, so that's nice to see. But let's see if we can outperform the market here and continue to excel. Again, I wish I could be throwing you a 1,000 bagger like I used to with some of those small caps guys. We did really well with some small caps already, which is great. But this is a really big bet. I'm comfortable making a big bet on this, and we'll see how it pans out. And I'd love to know if you guys are on the side with me. Are you buying Google? How are you riding through this? Are you planning on taking profit? Are these long-term holds for you? Like I said, Google will probably maintain a long-term position in my portfolio, but not nearly as much as it is today because I can't stomach that risk. And, I really want to keep deleveraging the risk out of the portfolio, or at least, I consider market risk always there, but I'd rather get the market risk through the indexes and let them auto-weight the best performers, because I'm not smart enough to catch NVIDIA. I wasn't smart enough to catch Palantir, so at least I had the indice to take me there with them. But on that note, I'd love to know what you think. Stay cool, stay awesome, and I look forward to catching you in the next one.